go to what caught my eye today, and we're going to start off with Cardano. I published this on TradingView earlier this morning, and I wanted to kind of break this down on the stream. All right, so let's get into this. So this is Cardano USDT on the daily chart, and there's quite a bit here, but this is a symmetrical triangle that is forming here on Cardano. This is a pretty textbook example with very little white space. So let's break let's break this all down. So symmetrical triangles are a chart pattern, and they can be identified when price forms lower highs and higher lows, and price action occurs between two sloping trend lines that you can plot out. Those are the blue lines on the chart right here and right here, one acting as support, one acting as resistance, and eventually those lines intersect. And at the point at which they intersect is known as the apex of the triangle. Now, symmetrical triangles, all triangles really, but symmetrical triangles a little bit more so, typically break out or resolve when they reach about 75% of the way through the formation, right? So it's actually 73% if you run the numbers, or at least those are the numbers that Thomas Polkowski published in his book Encyclopedia of Chart Patterns. However, I digress. Now, typical chart pattern rules apply here. You would like to see multiple tests of the upper and lower boundaries of resistance and support, and also little white space, right? So I talked about white space before. I kind of wanted to explain what I meant by white space. So let's talk about white space. Let's say we have a chart pattern, or price is doing something like this. It's moving up, it's moving down, it's moving up, it's moving down, horizontal support and resistance. And we feel like we can trade that some way or fashion. Okay, great. Now, white space is going to be the areas inside the chart pattern where price is not. So again, the white space. So let's look at IOST here. We could say something like, well, IOST formed a ascending triangle between March and May of 2020. We can see it progressed with a series of higher lows until we finally broke above resistance with a consistent horizontal level of resistance and a rising sloping angle of support until they actually met. And as we can see, if we would continue to plot this into the future, those would meet at an apex. And interestingly enough, date range, if we kind of measure from the beginning, the measurement to the apex would be 525 bars. And the measurement to the breakout was actually, let's say right here, 430 bars, and 430 divided by 525 is 81. So 81%, which last time I checked is pretty close to 75%. So again, another kind of good example of a triangle resolving as it nears the apex, when it gets to about 75% of the way through the apex. So we can certainly say here that price, or IOST USDT, formed an ascending triangle, kind of a textbook example, honestly, and broke out. This is not really an ascending triangle. This is more of a kind of a sloping bottom, personally, in my opinion, if I want to consult the Encyclopedia of Chart Patterns, because I generally assume for ascending triangles, for example, that they are going to happen in an uptrend. Ascending triangles are identified by they are preceded by an uptrend in price or upwards movements in price, and ascending triangles are not preceded by downwards movement in price. So that is a particular bottoming pattern and not really an ascending triangle, which is a continuation pattern of an already existing and emerging uptrend. So that's a pretty good example. As we can see, the support and resistance is tested fairly frequently, but let me point out the white space on this chart pattern. So as we can see, price does not make it quite to resistance right here before pulling back. And we can see it doesn't quite make it to support. That's called white space. And on this next upthrust, price is pretty far away from resistance. Now, on these sell-offs, we do touch support here and here. We don't touch resistance here. We do touch resistance here, so that's good. Come back down to support here. Of course, we grind out support here, and we break out here. So these areas were pretty good. Let's see here. So these are good tests. Yep, right there, and right there, and right there, and obviously at the beginning. But this area, 1, 2, 3, 4 areas of white space. And the more white space in a chart pattern, the less likely it is to work out the way that you think it will. Now, there's a lot of reasons, particularly in cryptocurrency where we have less volatility, why something like white space might occur. For example, by the time we had already formed this kind of initial upswing, you can see the long wicks, right, which indicate heavy market sells. Or, again, lots of coins changing hands. Absorption. Price was trying to move up and it ran into a wall and price began moving down. So this is probably a little bit of front running, obviously, because now you have individuals who are holding large bags of IOST, positioning at this price and attempting to distribute anytime price gets to around 35.82, 0035.82, until eventually somebody snorted and we were off. So let's go back to symmetrical triangles here. So it's a little bit of an explanation of white space. So the more white space you see in a pattern, the less likely it is to perform well. All right. So always be kind of wary of that, on the watch for that. A lot of people just see the basic bare bones of a chart pattern and they will post it. And I often think that people are not correctly identifying chart patterns. All right. So this is ADA USDT. This is what's currently happening right now. I believe that we have had a symmetrical triangle breakout here on Cardano USDT, which would be a bullish signal. Now, this pattern is about 30 days into forming. And if we measure, this is the breakout occurring right now, 30 bars in from the start of the symmetrical triangle. And I measured from the beginning, same place I measured to the breakout, to the apex, and that's 40. So 30 bars out of 40 is 75%. So again, holding to that, that rule pretty well. Now, I have here that these chart patterns hit their targets 69.5% of the time in bull markets. But this is Bulkowski's Encyclopedia of Chart Patterns. All right, so I apologize. So performance rank is 16 out of 23, which is where I actually got that. Percentage meeting price target is 66%, which means it breaks symmetrical triangles, break to the upside based on Thomas Bulkowski's research and backtesting, 66% of the time in a bull market, and they break to the upside in a bear market 57% of the time. So I think that we are in a bull market in cryptocurrency, and they break to the downside about 48% in a bull market and 42% in a bear market. So that number is actually 66%. All right, so as I said, symmetrical triangle is characterized by lower highs and higher lows. And price action is occurring between two sloping trend lines that will eventually intersect at an apex. Typically, we're going to see declining volume moving into the formation of the symmetrical triangle, and then we wait until price breaks to the upside. Now, we're going to be talking about measured movements here, and two ways that we can measure our take profit level when we correctly identify something like a symmetrical triangle. So method one that Bulkowski teaches is pretty straightforward and simple. You just identify the highest high in the formation, so not like the last high, the highest high in the symmetrical triangle. And you calculate the difference between that price and the lowest low in the price. So you just take the highest high minus the lowest low, and you get for Cardano anyways, 0.2109, right? So that's the kind of the measured movement. That's the entire distance. That is the range of the chart pattern. And so we just apply that to the closing price of the breakout candle, right? Currently, price is trading at about 0.8270. I have stuck some limit bids in on ADA USDT to actually capitalize on this. And this would be, so obviously my sentiment here is bullish and I'm looking to take price to the upside. Now, I had done something back when I used to trade more chart patterns. I had used this. So about a 1% movement. This is not exactly, I didn't actually use the trend-based fib extension. I think I just measured from this low to this high, I believe, and then added it on to breakout price. But certainly another way to do it, you measure from, low to high with the trend-based fib extension and then go down to the low. You're just looking for a one-to-one movement. So that is an easy way to do it. So initial take profit target is going to be 0.9165. And then if we actually measure from the highest high to the lowest low in the symmetrical triangle, then we actually get that 0.2109 added to closing price of the current candle is going to be 0.10419. So 10.5 cents would be the second price target on ADA USDT. Now let's talk about some general rules or some advice for trading symmetrical triangles. Generally, symmetrical triangles break out in the direction of the preceding trend more frequently, more often. So that means if price was in a bullish trend before price formed a symmetrical triangle, you are statistically more likely to break to the upside than to the downside. So something to keep in mind when you're looking at symmetrical triangles in different market conditions. Kind of the most important thing here is when you're taking this trade setup is wait for the breakout. Absolutely always wait for the breakout. Do not try to get in early. I have seen some Twitter threads over the last few days basically advocating that individuals enter into their positions now, right? They're like, listen, volatility is extremely low. And you know what follows low volatility? Yes, high volatility. We're going to see a big breakout movement. And I'm seeing a lot of these traders on Twitter who, you know, if I could even call them that, who are trying to give advice on how individuals should be trading these markets right now. And they're saying the highest opportunity is, you know, the highest profit potential is when you enter before volatility spikes. And while that is absolutely true, you are basically advocating and advising individuals to enter into positions in my opinion, the worst area to be putting on positions in Bitcoin, just because this is the moment of max opportunity. But you're left to a coin toss because no directional bias is really implied. There's going to be a big move, man. Better hope you get it right. Good luck. And again, you're going to get, maybe you're not going to catch the same breadth of the movement, but you're going to catch a profitable movement anyways. All right, so we talked about the measured movement of 0.02109 and the to take profit targets for ADA USDT. The third piece of advice here for trading symmetrical triangles is watch out for this phenomenon known as busted patterns. Bulkowski refers to these as busted patterns. So sometimes price breaks out in the opposite direction from what you intended. So for example, if price here on this swing low would have continued down and closed below the lower band of support for the symmetrical triangle, that you would look at that if you saw that on the daily close and think, oh, it's not going to break up. This thing is breaking down. Well, you shouldn't dismiss the chart entirely. Keep your eye on it for a few more days and see if it just reverses and begins moving its way back up. And if you see that happening, that's what's known as a busted pattern. And trading those setups can be profitable. And the last thing is watch for price to stall out in the direction of the breakout, like once the breakout occurs. So that is what we kind of have to watch right now. As we can see, price did close above the upper boundary of this trend line. And so far as forming a doji. Right now, this is all completely fine. This is a BPC, a break pullback continuation setup. This is where price breaks a level of resistance and then immediately pulls back and tests it as new support. Typically, this is going to be a entry opportunity for a break of resistance type trade. But if I see price stall out here in a serious way, if price can't get, let's say 1 ATR above the breakout level within like a couple days, then I am going to be a little hesitant about that. Like, where's the volume? Where's the actual support? And I would consider exiting the trade and just waiting on the sidelines until I saw the volume come in or until I saw actual better movements in the direction that I wish to trade. All right, so that's ADA USDT. The last thing I wanted to cover today is going to be Troy, Bitcoin, actually. And we're going to be talking about rectangle bottoms. It's another, whereas, you know, we were kind of talking about a breakout to the upside pattern. Here we're going to be talking about bottoming patterns and still kind of looking for breakout. So Troy Bitcoin is an interesting chart. I've seen volume pick up pretty significantly on this thing over the last couple of weeks. Just kind of monitoring the Binance volume scanners. And so Troy has been something to play intraday. So just kind of charting this and getting a little bit more data on it, we can go back and see that between the middle of March 2020 and the middle and really towards the end of May 2020, price consolidated in what I consider a rectangle bottom pattern. Now, a rectangle bottom pattern is a short-term bullish reversal pattern. A rectangle bottom is obviously going to occur following a pronounced downtrend or a down movement in the market. Often preceded by a decrease in volume, or often volume decreases as the rectangle bottom formation forms. Now, when the overall market is, when we are in an overall bull market, but the asset that is that we're looking to trade has not been moving up in a bull market, has been moving down. These patterns actually break to the upside about 85% of the time. So things to look out for when identifying rectangle bottoms is one, a preceding downwards movement in price, and then price action compressing and occurring in between two horizontal trend lines, right? We can see one right here, right around 33 sats, and then we see one right here, right around 27 sats. We see that very consistently, price consolidated between these two price levels and moved up and down. And what really characterizes a rectangle bottom is this kind of ping-ponging behavior, this movement up and down between support and resistance on this asset. And at these low price levels, this is often a sign of accumulation. Very similar to watching for the increase in volume on the symmetrical triangle to indicate when price is likely to break out. We can see that here as well. Let's look at volume, and we're going to put the volume moving average on, and we can see. Yep. So as price kind of moves into the last stages of this rectangle bottom, we can see volume increase pretty decently, and kind of the telltale sign is these bigger volume buy candles come in. Two big ones back to back, then a third one, and then that was your one. You had three of them, and then this big volume spike that came in. So what's interesting about Troy is that once we broke the upper boundary of that rectangle bottom resistance, so this pattern's dead, we seem to be forming another one. And, I kind of would like your guys' opinion on this because I shared this with another trader that I talked to. And, he kind of favors chart patterns a little bit more. And he was saying that he really thought this was a double bottom or even a swing failure pattern. I think that he's actually wrong on both of those. Certainly doesn't seem like a swing failure pattern. And actually, if anything, if we're going to talk about bottoming patterns, a rectangle bottom kind of looks like we're transposing to what might be forming a W bottom, right? W bottoms. So let's see if I can pull those open. Three rising valleys, triple bottoms. Here we go. Three distinct minor lows at about the same price. 1, 2, 3. 1, 2, 3. Avoid tall and narrow triple bottoms in a bull market, and avoid short and wide triple bottoms in a bear market. They overperform. So we're in a bull market, so we would want to see a short and wide triple bottom from Troy, if this is a triple bottom. It kind of seems like, doesn't really seem tall and narrow. It does kind of seem short and wide. I don't know. This one certainly seems more short and wide to me. But anyways, let's talk about the kind of the rectangle pattern here. We can measure our profit target one of two ways. The first way is the same way that we would measure our profit target for the symmetrical triangle, which is we identify the highest high in the rectangle bottom pattern, and that is going to be 36 sats. And then we identify the lowest low. That is going to be 25 sats. That is a difference of 11 sats. So we simply add 11 sats on to the level of horizontal resistance, 11 sats, to give us a profit target of 44 sats, which if we had entered anywhere down here, we would have struck on this candle right here. We would have hit that take profit target, which would have been a great trade. Yeah, that would have been a 44% trade in one day. And what's interesting is I think we're kind of setting up for a range-bound trading opportunity here on Troy. The other metric that you can use to measure your take profit target for a rectangle bottom is actually to, you can use any drawing tool you want, but just draw I'm going to use a trend line. Just draw a line from the beginning of the pattern to the end, to where it actually breaks out. And then, yeah, I'm not sure how to do it actually in TradingView here, but kind of the concept is, you can do it on paper if you printed it out, is to take the width or how long the rectangle bottom forms, and then take that and just flip it 90 degrees. So you just measure straight up. And although, while that might seem a little far-fetched, Thomas Bulkowski even said in the Encyclopedia of Chart Patterns that this is a pretty useful method. Okay, so we've got obviously measuring from high to low, and then measuring the width and flipping that on its end. If you can figure out how to do that conveniently better than I can, please let me know. So looking at Troy BTC, I actually took some exposure on this on the pullback earlier, and now it's already up to 39 sats. I actually got some entries at 37, and I had some bids down at 36 as well. You know, my advice for Troy BTC here is this does appear to be a good range trading opportunity. You can look to long near horizontal support. That's going to be close to 33 sats, and look to sell near resistance at 47 sats. Be careful trading the actual kind of breakout of 47 sats where resistance is itself. You know, as you can see from the breakout of this rectangle pattern, you had to be, it was a little bit difficult to catch because you had price come right up to resistance and then boom, just explode on the very next day. And again, you know, you did have a few signs like rising volume for 3 to bars, but you also had that back here. However, maybe knowing that the average rectangle bottom lasts about 45 to 70 days would have given you some pause, because if you're getting that kind of volume spike and you're only 31 bars into it, well, you've got quite a bit of ways to go. And then here where we actually do break out, yeah, we're about 70 bars into the rectangle bottom. So this looks like a range trading opportunity for me. I would be careful trading, you know, I would trade with caution the actual rectangle breakout itself. I would watch for rising volume, which we did see on today's current candle. High volume candles near support can often indicate potential entry zones, which is what we just saw right here. So a retest of support followed by a big buy volume. This overall looks like a pretty good area to enter, and that's what I did.